Hey, welcome to the 480 Finance channel, everybody. My name's Jeff Beers. Today we're going to take a look at Tesla, most specifically Tesla's revenue and earnings projections coming up, and try to think about when will Tesla's revenue and earnings grow into their stock price. This is a stock that has certainly been very popular over the past few years, and there's no question in my opinion that momentum and popularity have pushed Tesla's stock price beyond what the average stock trades for on Wall Street. We know that there's many analysts and fans of Tesla out there who have made huge projections for where this company will land, say 5 to 7 years from now, in terms of the amount of units they're selling, their different revenue streams. But at some point, all stocks come down to a valuation metric that sets the foundation for their stock price. Now, I'm a traditional investor who still looks at PE ratios, earnings per share, but there's a lot of different ways that you can evaluate a company. And what's interesting with Tesla, now that we're past the sort of like hyper growth phase of this company from, call it 2018 through 2020, now that they're profitable, we have more and more metrics that we can utilize when analyzing Tesla to try to get a feel for where their valuation sits compared to other stocks. All right, so we'll take a look at what we know about Tesla and use a couple other fast-growing stocks to compare against it and try to project when Tesla will grow into, or I should say, when will their fundamentals grow into their current stock price. All right, so first thing I want to do is try to find some comparables for Tesla. So I am going to use this simple Yahoo stock screener, set it to United States. We only want the big, fast-growing companies, large cap and mega cap. Also want to make sure it has some level of a PE ratio because Tesla is profitable now, so we can compare it against other profitable companies. I'm setting a pretty high bar here of a 40% expected revenue growth rate. Tesla certainly falls in that category. And for EPS growth, I just put a 1 because I didn't want to limit EPS growth for the search because it might eliminate some companies that would be good matches. All right, so looking at the results, and we're going to pay most attention to this estimated revenue growth because that's really the calling card of Tesla, and the bull case for this company is just that it's growing, beyond the capacity of any other company really that exists right now, certainly in the large cap, mega cap. And you do have a 72% estimated revenue growth over the next year or two. I'm not sure if that goes into the next fiscal year, but we're not going to overthink it. We're just going to assign 72%. And it is difficult to find other large cap and mega cap stocks that fall into that realm. We do have Zoom coming in at 145%, so we'll add them to the list. There is a BioNTech, which I'm going to leave off just because it's, it's not consumer related. It's in science, so we're just skipping that one. Trade Desk comes in at 60%, so I'm going to add that to the list. And then Peloton here at over 100% revenue growth projected. So those are sort of our high flyers that will compare against Tesla as we go through this exercise. All right, next up, let's just take a quick look at the PE ratio or average PE ratio for the NASDAQ 100. This was last calculated on April 9th here on Wall Street Journal. You've got a 39.98. Last year at this time, which would have been, kind of peak pandemic, you're at 25, so stocks had taken a big hit. The estimate going forward, so the estimated forward PE right now in the NASDAQ 100 is 30. So obviously the high-flying stocks that I assign, they're going to go way over this forward PE estimate, but I'm just showing it to you so we can get at least some sort of idea what the average is. All right, so now let's take a look at what analysts are thinking for Tesla in the future. I'm going to use Seeking Alpha here. They do a really nice job of at least illustrating earnings estimates coming up in the near future. And you scroll down a little bit and they have this really cool chart, actually, consensus EPS estimates for Tesla. And you follow the chart over the next couple years anyway. Fiscal year 2021, which will come in, the press release for that will come in on January 2022. You have an EPS of 427. Then looking ahead to January 2023, the expectation is they'll report $6.53. So really strong EPS growth here out of Tesla. This is when it's starting to pay off for the folks who are early investors. You go from 224 to 427 to 653. So a really nice run, and things are, obviously projected to go from here. I don't know how many analysts care to project out to 2029. I would say that this is a dart throw at best, but you do have $30 a share out here, January 2030. All right, so here's some additional metrics and the numbers in like a chart view. Fiscal period ending December 2021. So that is the same thing as this January 2022, because this is when it gets reported, and this is when, the actual accounting period ends. So the estimate is 427, as we saw in the chart above. That is a year-over-year growth of 90%. So a 90% growth rate on EPS for Tesla, which you're just not going to see too many companies be able to pull that off, particularly in the $4 range, right? So that gives you a forward PE of 168.69. And again, that's assuming you hit this EPS estimate, which is a consensus figure. If we went to like the high, if you wanted to be like 100% bull on Tesla and just take the high consensus. So if it was 550 at today's price of 734, that would bring your forward PE down to 133. So Tesla, even here today, you've got a forward PE coming down to 133 on the high estimate. Now, December 2022, fiscal year 22, which will be reported in January, February of 2023, you have an EPS estimate of 653, year-over-year growth of about 53%. So you're slowing down just a little bit by that time. That would give you a forward PE of 110.26. But interestingly enough, you have a high estimate. So the highest analyst, and this is a single person, the highest analyst is projecting $15.10. So looking at my calculator, that brings you down to a forward PE, or basically a 2-year forward PE at this point of 48. All right, so flipping back to that Wall Street page, NASDAQ 100, you look ahead to their forward PE, which is honestly, it's only a year away, so it's not really apples to apples. Our 2-year Tesla forward PE is 48. The NASDAQ 100 1-year forward PE is 29. So Tesla's EPS valuation over 2 years, it still comes in higher than the NASDAQ 100 in 1 year. Now, if we wanted to see what price would Tesla be at, if their forward PE over 2 years was actually at 29. All right, so referencing the 29 and giving Tesla the benefit of a 2-year forward PE and using the highest analyst rating of 15 for a projected EPS, if you multiplied 15 by 29, you would get a stock price today of $435. And ironically, it's exactly $300 more than that right now. So I wouldn't say that 2022 is going to be the year that Tesla grows into its valuation. I think you're going to have to add another year to that which interestingly enough, the high for this year is actually less than the year before. So there might be some sort of growth project of some kind going on here. I'm not sure. So the way I see things now and the EPS side, and we'll look at price to sales in a second. On the EPS side, if you bought Tesla today at $7.35, you are probably looking at January of 2024 before the price to earnings ratio actually reaches today's forward PE on NASDAQ 100. Now let's take a look at price to sales, because we know that fast growing companies don't always go by EPS. There's a lot of people that care only about the top line revenue, right? All right, so our revenue back in 2018 was about 21 billion, jumped to 24 in 19, and December 20th, you were at 31. So at the end of this year, you're supposed to go from 31 to 49 billion dollars in revenue, then jump to 63, and could go as high as 83 in December of 2023. So when we look at the chart view, all we really care about for those numbers is this forward price to sales. And when you look at it, December 2021, which would report in January of 2022, you would have a forward price to sales of 1402. That by itself is not really that bad of a number, to be honest. Now, historically in the stock market, price to sales, you would want to get certainly under 5. And a lot of people, depending on the industry, you would want to see, 1s, 2s, and 3s in there. But we are in different times. I would say this 14 is not as bad as some things that I've seen over recent history. And you've got 31 analysts coming in, so it feels like a pretty good bar. Now, if you skipped ahead and you went to the highest analyst for Tesla revenue, that comes in at 86.74 billion. That would actually bring that forward price to sales under 10, so into single digits. And then when you get to 2023, and you factor in that this is based off the consensus, but you have one high analyst coming in at almost 140 billion, that would put you well into single digits, and just on some quick math, put you at about a forward price to sales of 5. So at that ratio, I would argue like, hey, January 2024 again seems to be about the right time that Tesla would grow into its current valuation. All right, let's just do a quick comparison with Zoom. Their forward PE, if they hit their EPS estimate of 373, would be 87.91. Then in 2023, it would go to 79.68. So kind of interesting if you think back on Tesla. So we look back on Tesla in December of 2022, which is basically January 23. We used the high analysts at 1510. That brought our forward PE down to under 50. So when you compare that to Zoom, at least in this view, you actually have Tesla coming in 2-year forward PE, right? So a little bit off of the average, but actually cheaper than Zoom, which is pretty surprising. Then we scroll down to price to sales. And again, we're looking at January 2023, or I think on price to sales with Tesla, I was saying 2024. Zoom, even if they hit their high revenue, remember Tesla I had coming down into about the 5s. So between a forward price to sales of 5 or 6. So Zoom is definitely more expensive when you look ahead in this manner. All right, now let's take a peek on Peloton. And here with Peloton, their current forward PE is 239. Next year is 110. They're really going to screw us up because they run that sort of July to June fiscal calendar. But let's skip ahead to June of 2023. The high analyst for Peloton at 267. You have a price today of 100, so just call it a 50. Their forward PE would land somewhere in the neighborhood of 50. So Peloton is actually neck and neck from an EPS standpoint with Tesla. Looking down at price to sales, and again, we want to be in June 2023. Peloton is at under 5 at 412. I think our Tesla number was between 5 and 6, so Peloton slightly cheaper, and it would go down even more if we use the high estimate. But for the sake of comparison, let's just say Peloton slightly cheaper on forward price to sales, probably coming in the 3s here, whereas Tesla was in the 5s and 6s. All right, in the interest of time, I'm not going to do trade desk, but I can tell you I did a quick calculation. Their EPS 2024, if you use the high-end analyst, that came in around 50 as well. So very comparable to Tesla, also cheaper than Zoom. All right, so what am I trying to say here at the end of the day? I guess the bottom line is when you look at Tesla, there's absolutely positively no doubt that it is much higher valued than most of the regular stocks on the stock market. When you factor in the growth rate and you only cut it down to companies that are expected to achieve a similar growth rate over the next year or two, in that case, Tesla's coming in right about par, if not very slightly better than some of their competitors. Though a big takeaway for me in this was like Zoom is definitely off the charts right now. I would be careful with that one. But depending on where your comfort level is, Tesla and Peloton and even Trade Desk to some degree, but Tesla and Peloton are running about neck and neck on their valuation. I would give the nod to Peloton if we were looking right out to 2024 or January of 2024. But the real point here is this, and that is if you got into Tesla today at $735 here in April of 2021, it doesn't mean that the price won't go up from here, certainly in the short term. We talked about momentum and popularity. You also have the chance that Tesla would invent new products that perhaps would do better. But at the end of the day, if you wanted to creep into a standard valuation tier or historical average of valuations for most NASDAQ 100 companies, you're probably going to have to wait until January of 2024 for the report of the 2023 fiscal year before you can say, now look at Tesla's PE, now look at Tesla's price to sales, it aligns with the rest of the stock market. So there's a lot of ways to think about it. If you're a huge Tesla fan and you're just really excited and you think they're going to keep doing bigger, better things, then of course you could buy now in the 700s, put it off to a corner, recognize that you probably should wait 5+ years to really get a good ROI on it. Or you can look for companies that are trading at cheaper valuations and potentially make more money from your stock investment over the next 5 years. Now, in case you're curious, what would it take for me to buy Tesla as a standalone stock? Probably need to see it get closer to 500 when it had some weakness in the market, the overall market. You know, I was pushing for like $4.99 on this one, and that is with the assumption that you would hold it for a couple years to really max out that ROI. Now the market has bounced back and it's already back to 730. So for all we know, things will keep going. You know that my sentiment is the market is overvalued in terms for the prices people are paying for earnings and sales right now. But of course, that's just my opinion. All right, guys, let me know what you think about this Tesla valuation overview. What do you think Tesla's going to do over the next 3 or 4 years? Let me know in the comments. Thank you for watching. Please give this video a like and subscribe. We'll see you on the next video.